The housing market is absolutely out of control right now.
The real estate market or the housing market is something that has seen fluctuations all the time. But this time, because of the pandemic, the changes are extreme. Due to a downfall in the economy all over the world, the market is experiencing an extreme low. Furthermore, due to the lack of money supply in the market, the housing market is dull as the sellers are unwilling to sell at such low prices, and the buyers are unwilling to buy at the prescribed fees. For the ones who don't have a clue about what the real estate market is, it is the buying and selling or even renting of real estate that is an island, building, or housing. Real estate has been a source of income and a pool of job opportunities for many people. Still, now the sector is almost shut due to the pandemic crisis. So today, it is all about the crash of the real estate business in the fourth quarter of 2021 that the video is about. So let us start with it, but yeah, undoubtedly before that, you have to subscribe to the channel if you haven't done that yet, and hit the like button so that we can know that you are enjoying our content and want more of it. Let's begin. The housing industry has rapidly declined in the last quarter of 2021 and has been a factor in an increase in home prices. The horrifying impact of the second COVID-19 wave in the economy will stagnate price growth by crushing the demand and offsetting the benefits to real estate developers being offered by the government in the form of subsidies and incentives. During a survey in May 2021, analysts predicted a 1.3% average growth in property prices, but FAR said the second wave hit the economy by prompting people to save more rather than spend. Given that home purchases necessitate large sums of money, demand for homes would be lower during the interval between the second and third waves. Rates of properties might be thus adversely affected due to the stress on demand. In contrast to what happened in the first wave, which exposed the impact of home ownership compared to other assets in the event of a pandemic, and thus worked as a demand paddle for the housing industry, the coronavirus second wave may interrupt the demand momentum created by the first wave. The pandemic-induced quick hike in the price of essential raw materials, such as steel bars, cement, plastic, man-made polymers, and resins, etc., are putting builders under pressure to hike the prices of new projects. This hike has affected not only the sellers and buyers, but also the lenders. The lending property has also seen a downfall, as people are not much willing to move and shift. The supply shortage of the raw materials is only making matters worse. In the last 3 months, prices of iron have increased by $270 per ton, which is almost an increase of up to 50%. Not only this, the price of copper and aluminum has also increased, which has an impact on the construction costs. At a time when the real estate industry is already levied under the pressure of the second wave and the lockdown restrictions being imposed, the rise in prices of raw materials will put the recovery of the real estate sector through a formidable phase. Once the lockdown restrictions are reduced, we might notice a gradual rise in property price in the forthcoming months, where the percentage change may vary as per different market structures. By the conclusion of the following quarter, we may see small increases in property prices in various regions of the world. Still, by the end of 2021, we may see more significant changes in pricing. All of this will be contingent on the successful stabilization of the ongoing pandemic crisis in the country by the relevant authorities. In the coming back quarters too, value growth is anticipated in the real estate sector to stay range-bound amid world agencies predicting a long-drawn recovery method for the economy. A combination of the supply side scarring and demand side constraints, like the weak state of the monetary sector, can keep the amount of growth below its pre-pandemic path. While there has been no considerable upward or negative movements in terms of pricing, there has been some appreciation in the real estate markets throughout time. However, in the metropolitan region, where property prices are already much higher than the usual average, price growth has been quite slow. A rise in interest rates is one of the reasons for crashing this sector, which is unlikely as we tend to seemingly face a worldwide depression. However, traditionally an increase in rates can increase the price of mortgage payments and build shopping for a house less cheap. If owners confiscate fixed-rate mortgages, they'll be insulated from a charge per unit rise for 2 to 5 years, reckoning on the mortgage term. In the UK, we've seen rising interest rates within the late 1980s in 2005 to 2007, which caused a pointy rise in the mortgage payments as a financial gain. In 1991 and 2007, the United Kingdom experienced a housing crash once a peak in mortgage payments. House value to earning is often a significant concern right away. One major issue determinative of the underlying affordability of housing is that the quantitative relation of house cost to incomes. A good indicator of a housing market crash may be a rise within the quantitative relation of houses' cost to average earnings. Individuals pay additional on housing prices than on living prices. Instead of having unacceptable savings, the population uses credit cards, resulting in the next spiral of debt. So what should an investor do? How can he battle this situation? Let us see that. Housing prices in some of the countries have witnessed significant correction. While expecting prices to rise quickly is not a good idea, the current situation does provide investors with an opportunity to invest in residential real estate at affordable cost. Because prices are unlikely to change in the near future, this could be an excellent chance for purchasers who can secure financing. Housing finance is also available to purchasers and investors at comparatively reasonable prices, as house loan interest rates are currently at record low levels. As you can see that the investors are on somewhat safer side now, let us see how the builders will be affected. Slump-hit builders were fighting their hopes on government support to shed the increasing unsold stock, even as an ongoing crisis in the world's non-banking finance sector, a key source for housing sector funding, made borrowing extremely difficult, jeopardizing their plans to deliver projects within the promised time period. Developers were holding on to the unsold stock worth thousands of dollars, a near-halt situation on construction activity between the lockdown to contain the virus led to the delay in supply of manufacturing material and equipment from other countries will further push delivery timelines of ongoing projects. Therefore, consequently increase the overall cost of housing for developers. Through various efforts, China, the country where the virus originated, has been able to rein in the pandemic, with workers returning to offices. However, the other affected countries are forced to stop or postpone the work. Other than the housing real estate sector, the mall building sector has also been adversely affected. These projections were, however, made during the pre-coronavirus pandemic time. The construction of these should have been begun by now, and a few of them which were completed and were on the verge of opening have not been opened yet because of the imposed restrictions. Mall operators have been the most affected ever since then, and they would have to act reasonably to tide over the crisis amid projects of rising vacancies in shopping malls. The retail segment has also been affected by this, as the shop owners could not place the sale as they had expected. So what do all those insights and predictions add up to? Is it excellent news for home buyers? In some ways, that depends on your shopping timeline. Home Buyers United Nations Agency will await the bidding wars to disappear, costs to stagnate, and listings to remain on the market longer can get a lot of house for his or her greenback. Home Buyers United Nations Agency, who can afford to take a seat on the sidelines throughout this hot housing market, are rewarded. And if you are within the market to shop for without delay and cannot wait it out, stay patient, exercise caution. Do not ever pay over. You'll be able to well afford. Take into account choices maybe in numerous neighborhoods or off-market properties that haven't nonetheless been listed. Inspect properties that are on the market a minute and seem overpriced. Will the housing sector be able to rise again in the next quarter? Comment down your thoughts in the comment section below. Let us know what you want to see from us next. And don't forget to subscribe for more gripping content.